right, team, what's going on? Good evening. Happy Sunday, September 14th, 2025. Glad to be with you this evening. My name is Carlos Garcia, founder and CEO of GAR Capital. It's time to rock and roll. Futures are open. As you can see, pretty much flat at the moment. Gold is down this evening, down 0.32%. The dollar is up a little bit, 0.11%. Crude oil is flat, and crypto is down. Bitcoin futures are down 1.3%, Ethereum down 1.4%. So again, not much going on, but we have a huge week coming. So I want to start with that first, and then we can go over our results towards the tail end of this video. How does that sound? Okay, so let's really prep this week. That's what I want to get everyone set up for. All right, economic data. Let's start with it. This week on Tuesday, we have retail sales. That's going to be very important to watch for. Why? Because if retail sales start slipping, like the labor market is weakening, remember we had a very low non-farm payroll report number. If retail sales show some downside, that may permeate a bit towards the Fed's view on the future of the consumer, meaning possibly more rate cuts. So if you are a capitalist pig like me who wants cheap money, low rates, and higher stock market or higher asset prices, bad news is good news. Let's just say that. The worse the news gets, the more rate cuts we will have. You're gonna have to think of it that way. I think that's how the market is pricing it in anyway. So a beat on retail sales would be okay. Obviously, I don't think it's a bad thing that retail sales are up, uh, counterbalancing with employment going down. That will kind of keep inflation at ease, um, and at least corporate margins healthy, to say the least. I expect, honestly, just to be in line. I don't think there will be any kind of big deviation, to be quite honest. We'll see if the jobs number affects that. The labor market. 7 a.m. on Wednesday, we'll have the 30-year mortgage rate. Mortgage rates are falling because we're going to get a rate cut on Wednesday. The expectation is 25 basis points. The home run, I hope it happens, is 50. What will it take us to get 50 basis points? We just need the committee to just agree to that. The market is expecting 25 basis points. Obviously, those guys don't live in a bubble, but they were in a blackout period, meaning they can't speak about hints of rates decisions, obviously, because we had the meeting on Wednesday. So with that being said, the scenario is if it meets expectations, we may get a sell the news event where stocks may pull back when Powell is speaking. I think that's kind of natural and normal order of things. You're kind of buying the run up into the event, then sell the event. So we may get a push into Wednesday and then slip back on Wednesday. And then Friday's OPEX day, which is the expiries of some futures contracts and some options contracts out there. The last one we had was in August. And with that being said, we'll see some added volatility on Friday. 25 basis points, again, that's the baseline. 50 would be great. I think if we want stocks to really soar, we want 50. I kind of baked that in a probably 5% chance, even if the retail sales numbers were bad. The meeting actually for the Fed is Tuesday, technically through Wednesday. Maybe live data matters. Sometimes the Fed says it's live data. Who knows? But again, let's go with the assumption that 25 is going to happen, and then we'll kind of trade accordingly to that. Any kind of deviation, if we get 50, man, I'm the first one popping champagne for sure. But let's not expect that. Hope, but not expect. Building permits, these leading indicators of housing. Housing starts, for example, that'll be on Wednesday as well. Thursday, initial jobless claims. Again, we had a high number last week, 263,000. The forecast is now 250. So we'll see if there is continuing jobless claims out in the labor market. So we got that, and then comes with earnings. I mean, FedEx, Lennar. I don't think any of these stocks are really worth our time, to be quite honest. So let's go ahead and start taking a look at some charts. If you're taking a look at S&P today, you're probably thinking that we have some kind of huge gap up. We don't. We have a contract rollover this week, which is OPEX on Friday. So if you're using the Thinkorswim platform, make sure you have the correct contract, ESU25. So make sure you got that on your terminals. We'll go to the hourly chart here. And again, all-time highs. What more can we do here? really just waiting for some semblance of a discount, some semblance of a pullback. This is just the reality we live in. Huge V-shaped recovery, very similar to COVID actually, in terms of kind of that price action. So in terms of S&P, is there anything I want to do here? Well, we can't really look at the 4-hour chart because we're so near all-time highs. So if we're doing kind of, you know, intraday trading like we usually do, we may have to wait for 65.49 to break down before we do anything. So let's call it 65.50. And if we do, maybe we get a chance around 65.10. We're still in an uptrend. So I wouldn't expect that to change ahead of the Fed. Maybe after the fact, sure. But you can see that we have this kind of little bit of an air pocket from 65.85 to right around 65.55. That's about a 30-point range. In my opinion, there's not much to do there. If we're going to go ahead and look at this in terms of a bigger picture, any kind of discounts possibly, are we going to get some kind of change of trend possibly? Let's look at it. I'm going to go ahead and change this here, remove this drawing, and then we're going to go ahead and just do the basic upside wedge formation. Depends on how you see these things. If you're a bear, you're loving this price action because if 65.50 breaks, then by all means, we're going to get a nice pullback in stocks. What is the price that I should buy Carlos? That's the question I get all the time. And obviously, hindsight being 2020, you're looking at what? April. But again, easier said than done, as we know. Life happens. It's hard to say, oh, I should have bought there. I'm going to buy right here in the face of a 20% drawdown in markets. I mean, I couldn't even price in these stocks because the tariffs were changing almost daily at that point. So if let's just say, for example, you missed the dip, it will not be the last one. So don't worry. It's just the reality of the world. It happens. So don't beat yourself over it. Let's take a look at it, another opportunity moving forward instead of kind of dwelling on the past. 62.83 on the S&P currently. That'll kind of be the buy the dip level for me. That'll just be a retest. Is that possible? Absolutely. Absolutely. 25 basis point cut already expected. And then Powell starts mouthing off saying that that's going to be the last rate cut of the year. Oh, yeah, we're going to get a pullback. Man, these are scenarios. These are possibilities. So let's kind of keep this written down. 62.83 S&P 500 futures. That is your first buy the dip level. And again, if we start breaking that, then we can start looking at different roads of possibilities. In my opinion, stocks, in terms of the stock market, is expensive. It's bubble expensive. I think this is a tradable market. I don't think it's an investable market other than dollar cost averaging, unless you're really picking the stocks. It's a stock picker market. How's that? I wouldn't be loading up on the S&P here, long term. Again, unless you're dollar cost averaging right now, like I said, trader market. Let's take a look at gold. We know that'll be affected by the Fed this week. So we'll go to GCZ25. And as we know, gold has broken out. So we're looking for right around 36.15 on a pullback. If we get that, we're really just looking for discounts, let's just say, for lack of a better term. And you can see the daily on how much this is broken out on gold. Gold is soaring like it's a crypto at this point. In January it was at 2,700. Now we're at 3,600. Almost a $900 move in less than a year. Does that happen often? No. To me, it's tradable. That's it. I think everyone is so bullish on gold that it's ripe for a pullback, and we are overbought, to say the least. You could see that the 20-day MA right above, kind of leading the way. We can kind of use that as a guide for the most part. I think that's at worst we'll get is 35, 37 in the near term. So let's just say that Powell says this is the last rate cut of the year. The gold will pull back. If Powell comes in a more dovish tone, meaning more rate cuts, gold's going to fly because it's all based on this thing, the dollar. So again, the more rate cuts we have, the more dollars are going to be flooding the system because the Fed really just buys bonds to lower rates. That's kind of how it works. Take a look at the monthly chart here on the dollar. It seems that we are ripe for a pullback. We're going to break down here. So what does this mean? It means that based on technicals, based on the dollar price here, gold's going to go higher, Bitcoin's going to go higher, commodities are going to go higher. The only way we'll bounce from this trend line, again, is if Powell says this will be the only rate cut of the year. I don't think he will. I think the dollar pulls back. The only thing that kind of gives me a little bit of kind of caution is that there's a lot of dollar bearish bets out there in terms of hedge funds. So when everyone's piled to one side of the fence, you're kind of looking at, the other side of the trade. Like, what is everyone seeing? Why is everyone thinking the same? But can't really fight the technical price action here. The dollar is set to pull back, and a 50 basis point cut will get us down there for sure. Again, possibly. We will see indeed. Okay, let's kind of go over the week that we just had. In options, 2 for 2. Micron 130 calls. The stock closed at 157.23. It went as high as 945%. And if you still have runners, it expires September 19th. Micron, what a trade. That was part of this God candle. And you could see here, and on Micron, I actually held. It was on the 7th, and you could see we were at 131. And what a move on Micron. Absolute just rocket. Palantir, 40%. We caught those. I also set a masterclass trade, the 370 calls on Tesla. And of course, I didn't hold. I should have held. I only took it for 128%. And of course, it soared after the fact. How much did it go? Let me see. It went as high as 427%. Man, of course, when I close, it soars. That's how it goes, guys. Trust me, it happens to me all the time. We also have IWM calls and some AMD puts that we are running. Let's go to the watch list and charts. I do have a couple of stocks that I wrote up here. I'm really focused on China this week. Take a look at KWeb, above 40. That's a breakout. Take a look at Alibaba, one of the biggest parts of these China ETFs, breaking out above 150. How about FXI? Above 40 as well. KWeb FXI, very similar. I'm just kind of looking for volume there. So as you can see, these China stocks are absolutely bidding. I'm going to stick with those three. I'm going to keep them kind of in the back pocket. I want to see if the volume is there. If I see anything above 10,000, I think we're going to go for it. Intel, I also saw some unusual volume on here. Above 27, 2650, we'll call it. That's a breakout. We will see if we get that. Maybe some headlines for Trump. Who knows? If we have that trade, and then we get some overnight news, who knows with Intel, that could be another banger. Amazon, here's one that I lost with Masterclass. Some of them may have closed with 17% profit out of that PPI last week. But I think Amazon does give us a little bit more of a push. But again, we need 240 on Amazon. UNH set to go near 362. Remember, the seasonality on UNH gets very strong. We'll take a look at investment clubs. I'll go ahead and show you guys. There it is. UNH seasonal chart. Right into October is where we get that push, but we may get a pullback, seasonally speaking, towards the tail end of September. But October is where we really get that push. So maybe, just maybe, we get that break. Masterclass trades this week. The Tesla calls. Amazon, if you got those gains. And UNH, I'm holding, and some Uber calls I'm holding. Futures this week, kind of quiet, but undefeated. Perfect. 2 for 2. 65.40 ES long, 20 points. And an ES long at 65.70 for 10 points. Doesn't feel like we traded much, but, I'll take those easy wins as they come, for sure. So we got a lot on the board. I just kind of want to continue that consistency. I've been getting a lot of DMs from everybody telling me how great they've been doing. That does make me so happy to see, especially now that we're getting to one of the hotter periods, in my opinion, of stock market trading. Right around October, November, that's when we start really cooking. So I really look forward to you guys joining the server, maybe signing up for Masterclass. I would love to teach you one-on-one. Let us know. garcapital@gmail.com. Shoot us a DM on Instagram as well, or you can always comment here on our YouTube page. Appreciate everyone following. Appreciate you guys always following our videos and our blogs and all that good stuff. We hope that all of this information just helps you along your trading journey. Any questions at all? We'd love to see you on the Discord as well. Check out the scroll on the bottom www.gar.capital. Access our Discord. We'd love to see you there. Have a great rest of your Sunday, and we'll see you tomorrow for our morning brief at 8:45 Eastern. Cheers all.